All right. All right, let's get started. Um, all right, so first thing I want to discuss is how I'm going to manage my 401 account and the IRA account. Let's just say that I'm starting brand new this year. So the maximum 401 I can put is 23,000, right? And then the IRA I can do up to 7,000. So that's $30,000 yearly, savings on those accounts. So if we were to target 5% gain year over year, that's gonna get me about 1.9 million in the next 30 years. And you can see here the first year, that's the amount that I'm gonna have. This is just the basics math. I didn't compound any kind of you know the money that are making on the year. So it will be compounding end of the year. So this is much more lower than the actual number that we may be able to get from this strategy. Anyway, so you can, yeah, yes, can't you guys see? All right. Oh, sorry, I'm sorry. All right, so can you see now? All right. So here you can see I put here 30,000 month yearly deposit and then 30-year target, assuming that I will retire in 65. So if I were to get 5%, that's still going to get me 1.9 million by the end of the year, by the end of the time I retire, right? So it's going to take me 30 years to make 93,000 every year from this 5% gain. But if I go up to 10% annual return, it's only going to take me around 16 years to get to 100,000 a year goal. And at the end of the 30 years, I'm going to get about 4.9 million, right? But my goal, this is the normal year over year is 500 return since 2008 drop, right? So this has to be someone's normal return if you are putting the maximum deposit on the Roth as well as on the 401k. And my target is not 10%. I want to beat um, the SP 500. So my target is about 20%. So let's see if I go about 20%, that's 35 million by the end of 30 years. If we go about 25% on average, that's 96 million. So it's going to take me about 7 years to get 200,000 in stocks returns every year. So after that, it's going to accumulate so fast. Within like 3 more years, I can get like 200,000. 2 more years, I can get to 300,000 and stuff like that. Um, so why I'm showing this, getting that 25,000, 25% or 20% up annually year over year is really important. And how can we do that is what that was my question I had while I was on the um, vacation, and then I came up with a strategy that is incorporated with the fair value strategy. So let me get to that here. Um, let's see. Let's check more image. So one day, so I created this additional um, add-on for the fair value. Basically, what it does, so we have the fair value, we have the forecast on. So the fair value right now for MOH is about 227. So I will explain this how to use this metrics. So the way I'm using it, you can see all-time low, it's around 48, 0.48, right? Right now it is, right now the current ratio with the fair value is around 0.68, which is basically the lowest for the last 52 weeks, which is also 0.67. and high, it has double. One time it has doubled the fair value, which may probably be in this area last year. So that means it has the capacity to double the fair value. And assuming those kind of data, that means we can expect some of these stocks to double their fair value, and then some of these stocks to go as low as 0.48. So after going 0.48, if it try to go more below that, that means basically it's a risky area, because the stock can go down, means with all the income, that means they may have some kind of an issue with their financial stuff. So we have to then check their internal data. Right now, financially, this one is a strong stock. The strategy I create to get to 20%, 25% year-over-year goal is basically this. I have this indicator. Let me go back to the replay, and let's see somewhere around here, which is, I want to go to COVID time. At the COVID time, the fair value is, the stock has passed fair value. So let's wait and see time that the fair value goes down, actually go up, and the stock price go down. So right now, when the fair value is below the stock price, it's not a buy. So we will have to wait. Only case we would buy something like this is on the speculative stocks like Tesla and Apple, because their fair value is like $10 and stuff like that, right? So then we will calculate these 52 weeks lows, and then all-time lows data, and basically buy it. I will explain to those information later, but let me go back to this strategy that I'm trying to show, how to get 20% plus year over year. All right, let's just continue to run. So you can see the fair value is starting to go up, 96 to 142. A little bit more. $177. Use use this replay to like basically see how a stock adapting with these indicators, so you can basically understand how in the past, if we had these indicators, how it could help us on deciding when to get in and when to get out. Still it is really high, closing in. Let's see. This is the one that started to drop down. Six. All right, so here you can see there was a blue color label, right? It says 20% below fair value, consider buying. So now the new add-on will show if the stock is below 20% below fair value, 40% below fair value, and 60%, and then also 80% below fair value. So based on those information, it will send us an alert. So in the future, in the swing options beta, I'm going to redesign it to get alerts from all the 3,000 plus stocks that are really good, has a income that is more than 100 million in net income per year. The cap is about 1 billion, and they also need to have 100 million in cash on their reserve. So those stocks I will filter it out and then add them into our swing options beta indicator. But the thing is, when it show 20%, that's not a buy. For me, it needs to go down to about 40%. When it is 40%, then there is higher chance that the stock can go up 20% in profit. So the places that I would sell is if the alert shows me 40% down and consider buying, then I will buy that area. And if it goes 20% up, then I will sell. Or if it goes to fair value before reaching 20%, then I will also sell. I'm not going to wait until the fair value is met, because in most cases we will see stagnant stock growth. So therefore, fair value might not hit for many years. Sometimes I have seen when the industrial cycles change, to meet fair values, it takes more than four years, some cases. But the 4 year wait is also not bad, because sometimes it's 150%, 200% since the drop. So we had to really figure out a good strategy to like play the fair value. But for my purpose, which is to get to 96 million within the next 30 years, just by putting 30,000. This is assuming we don't have any 401 deposit or IRO deposit. But if you were to put your 401 deposits that you have, then this data change more, right? And then again, I'm trying to get to 25% goal. So my strategy is always going to be to invest 3% of my 401k to these alerts. Not more than that. You can do more than that, but the thing is, we are now tracking 3,000 of these stocks. So if we put 3%, that means when we get like 33 alerts, our portfolio is going to get full. Like, means it's going to buy with all the cash we have. And while I do that, I will also have this stop. I will not have a stop loss actually for this case. I will all have take profit. And if the fair value goes below my buying price, that means that is going to be automatical stop loss. So in theory, that means if you buy, let's say this one drop down another 40%, means from fair value, that's going to be about here, which is 135. Let's say it drop down to 120, and then fair value also drop down to 100 and something around 81. That means stock is had some kind of a big issue, right? That's why they lost the fair value by half. So I would sell at that point, even though I'm losing money. If the stock goes below the fair value, then that 3% that I took will be sold. But I have run multiple scenarios that hasn't been the case for this strategy. I created my own backlog tracking for this strategy, and it was really, really crazy. And I have seen 50% gains on this for some years, even 70%. That's the beauty. So this is just a one example, but let's go to something that has couple of fair value scenarios. This AES which is a utility stock. Let's double check since let's see, since 2020 drop. Right. So in this case, when stock was dropping, the fair value was at 19, and then it hit the 20% below value, and then also hit 40% below value. So for an example, in this case, at 40%, as soon as we get alerted the 40% number, I would buy there. And I would basically, for the 40%, you're going to put about 20% gain take profit, which is going to be somewhere here, right? So on that case, you can see that it did hit actually after it dropped, even though it dropped more than another 30% and then bounced back. It was fine because we made that 20% gain within within 1 month. So that's not bad. That's the beauty of this strategy as well. Uh, Sometimes it will take 6 months. Sometimes it could hit within 1 month for 20%. But for when it dropped to 60%, that means some kind of a recession or a issue with this stock is happening. Still, I would buy at that point and then wait until it hit 35%. So the stop loss for the 60% drop is 35. Not stop loss, take profit is 35. Let's play it again and see how this plays out. But you can see from 40% drop to reach the fair value, it took about, 224 days and 86% gain. So, I mean, while it buy and sell in these areas, there are 3,000 more stocks for us to like buy and sell. You don't have to stick to one until it reach the fair value. But as you can see, there are rare cases that within 1 year the fair value was met, even though it dropped down a lot. That's why this strategy is really good, because even like I check with a lot of other high value investors, their fair value are sometimes really higher than most of these values, and they have never been met in the past when I, basically historically did the replay for those kind of stuff. But I was getting hit because this is basically calculating the cash flow they have and then the assets they have. So the fair value I came up with was scenario, as a scenario it is much more closer to actual value of that stock. All right, so let's see another case if it goes down to 60%. So right now it's high, so we won't buy when it is above fair value for these kind of stocks, unless it is technology. Then we again, like I said, we calculate the all-time high and then all-time low to see if it is worth buying above the fair value. For me to buy above the fair value, then the all-time low should be in zeros. I mean, less than 1%, one ratio. It has to be always above. That means it has never been hit the fair value since the information available in trading. All right, let's see. So 2022. You can see for the last, since 2020, the fair value never went up. So that means the stock is not gaining real value, it's not improving. All right, there. Let's go back to here. So in this case, first thing we gonna get alerted for 20% below fair value. So we are again, I'm not gonna buy at 20% because that's not enough profit when we buy at 20%, because most of the cases when we buy at 20%, it will only go up about 5% or 10% max. But at 20%, 40%, then again we buy here and then we put stop loss or not take profit of 20 something, which is here. So again it hit, maybe that's too hard. Yeah, somewhere here. Within like 1 month it did hit right again. Let's see another scenario. I want to see a 60% drop, passing 40%, because when it is going to 60%, we will be buying at 40% too. And then when we get the alert at 60%, we are going to buy there as well. And this is going to become a dollar cost average strategy as well. So that means if you buy at 40% below as well as 60% below, the difference will be about 30% below, something like that. So it's still good. And we will keep the 35% target for both of them. There. All right, so 40% was somewhere around here. So let's say we buy there, and then it went down a lot. Fair value came down. That's why the 40% again got updated this area, because the fair value came down. So that's fine. All right, they are 60%. So this area, when was this? Okay, so this is when I think the budget was approved for the not to support wind and solar stuff. So that's why it went down a lot. That in those cases, so we are going to get the alert for 60% down, because when the stock went down to 60%, that has to be because of some kind of an issue, economical, political, or what do you call it, the environmental. So that's why the stock went down, and there was the news about the Trump administration cutting down the solar energy initiatives. So we buy there as well. Oh, so I should have brought here. So this one will come down to somewhere like here. But I would say from there, I would sell around 35 here. Technically, it should be somewhere here. But let's see. All right. So if this stock goes back to 18, I will make 35%. And I brought twice. That means from the 33 stocks that I can buy, I'm gonna invest 6% here, and I'm gonna hold on to it and see. Right now it's July, so it's still a good buy. It just shows because I still have this stock price. So I do actually have this stock at 9%. I haven't sold it yet. So I did couple of times, did sell around June actually. I got back again on 11 something. Before this fair value strategy was, you know, came into my idea. But now uh, BlackRock is actually going to buy. They said they're gonna get AES, so I think they are in negotiations, but we don't know. My fair value did also suggest around 20%, $20, but now the OPAM fair value is saying 25, so that means we have more time for it to go up about 8%. But again, $18 is where this will sell. By the case, within 1 year, if doesn't reach 35% after it hit 60% below, then I can force sell it as well. That's the strategy that we can do to rebalance our stock. So this is the strategy to get to 25% year over year goal. We are going to track 3,000 stocks with fair value above these stocks, a stock price right now. And whenever we get a alert at 40% below and 60% below, we will be notified on our Discord channel. And make sure if you want to follow my strategy, just do that 3% portfolio max cap, and you will be better. So, do you guys have any questions? by the way, I'm going to automate this strategy as well. So in the future, next year, you guys can, if you want, can connect a Robinhood IRA account, but not the swap. So that's, you do have the option to get this automated in the future. So any questions? Correct. Yes, correct. Everything. Everything I explain, it is going to do that. Mhm. Correct. If you want to do that and target, the goal is to get to 25% plus. Because if we allow SPY and Woo or whatever to manage our funds, we can still get these kind of numbers. That's fine. You can basically divide it by 50-50. Leave 50% for the this manageable funds to like ETFs to manage it, and then do your own management with the other 50. It depends. The more you understand this strategy and see results that we can make 20%, 25% plus year over year, then it's fine for us to put 100% on this strategy. But I will release this add-on. Go ahead and review this strategy with the replay and see how it always react when the stock drop to 60% below. You can see 60% below here is the lowest it went. I didn't make it up, right? And it just went up 39% since then. So those kind of stuff can be seen in many stocks that have a value, have a net income and free cash flow. That because it makes sense because the stock value is really undervalued and everything else is going up because of hype, and one day these will catch up. Because we are going to track 3000, it's going to be rotatable and things will always rotate. So we will always be able to catch that best stock. So in worst case scenario, how this can go bad is, for an example, even though with all the financial data was good, if they were faking the financial data and they got caught, the fair value is high, and all of a sudden our fair value will get updated and it will go down, and it will act as a stop loss and sell if the fair value drop down below the price, the current price. So then that's one risk. The other risk is like overnight, if they announce bankruptcy and the stocks goes down 80% below, and that's the biggest problem. But the problem thing is, we may lose from the 3% that we were buying, or 6% in this case, because it's hitting a couple of 40%, right? So those kind of data, but it's rare cases, and I haven't seen a stock doing that, other than, I guess, United Health. United Health. Let's see. United All right, so this one, fair value. Let's see. All right, yeah. See, the stock was always above. Oh my God, it was 600, and then the fair value is still 253. So still, the financial data wasn't that bad. We could basically see if they are taking or not by reviewing the fair value for the last 4 years and see if it is moving up a lot or slowly moving up. That means that's actually the right way if it is slowly moving up. So right now it is not below 20% or 40%. It's actually, let's see, about 8% below the fair value. But the case is all-time low since the data was available was 1.52. That means right now it did break it because 1 year 52 weeks low is around 0.91. So this area is really actually good to buy because now this is going to get registered as the all-time low in the next couple of months, and this will be updated to 0.91. So this area is actually good. So you can also see some resistant areas here, here, and then this one COVID drop. So unless they have bad news of financial fraud or anything like that, which we actually can like check it out and see if it is the case. Just play this all around and you can see if the fair value growing slowly. If they have done financial, uh, frauds like the Dodgers checking, I would say this fair value will anomaly, go up and down really badly. Any other questions about this strategy? Hmm. Mhm, 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 yeah. Do that account allow you to like connect to individual stocks via Squab? Because most of these funds they do allow us to invest on individual stocks. So look into it. All right. Anything else about this strategy? If not, I will go and check the golden lines. Any question? Okay, which one you did? Which? Oh yeah, yeah, yeah. All right. So all-time low is basically since the day these guys are giving us the earnings data, which is on 2020. That's the all-time low compared to the stock fair value. That means you take the stock value, let's say for an example, this one $6.15. You divide it by you take the current price to $2.51 divide by the fair value, then you get the 0.41. So if it has gone down to 0.14, that means um, if you actually just multiply these two, and you may be able to find out how far it has gone down in previously. So stock going to like 0.14, and this area, the current price ratio going to 0.14, which is the 52 weeks low. That means in the last 52 weeks, which is within the 1 year, this has gone down to the lowest price it has ever recorded uh, in compared to the fair value of the stock. So that means at 0.14, it was a great buy if we ever had caught. I'm not sure which time. Let's 86 cents. 86 cents at 42. I'm getting 86 now. We- Oh, actually, we are in the 1 day data, so it may not actually show us the correct one. So anyway, I'm not explaining. I'm not saying you to buy when it is below one for the all-time low or anything like that. I was saying about that is for the speculative stocks like Tesla, because Tesla has never gone down in the all-time low, has never gone down below 2. That means to get to 2, the stock has to go down because the fair value is 35, right? So you multiply 35 by 2, that is 70. So this stock needs to go to 70 for this to actually hit back again the fair value that it was once hit. Maybe this area, probably. Let's double check. No, even that was 4. That's the 52 weeks low. That see 4.86. Maybe somewhere here. Yeah, which is actually the COVID drop. So at the COVID drop, it did reach the fair value, lowest fair value. So this area here, this one, that was the brand new all-time low compared to the fair value. So that means that was the best time to buy that this stock. Does that make sense? Because this was a technical stock and then speculative, so that's why it will never reach that one here. Uh, it could reach, I mean, because when people like in the future don't think this will continue to go up, then this will again start to become a fair value game stock. Right now, it's not. People continue to buy. That's why it's selling at 20 times more than the fair value right now. But if you have bought it at that area, you see it's continue to go up and go up like crazy. Does that yeah, answered your question? No, it's fine. Yeah, yeah, it's fine. I just because um, the goal was for me to the reason I created all these all-time low and all-time high, and then also 52 weeks low and 52 high is for me to trade different stock in different strategies. So all-time low means if the stock goes back again to the all-time low, that means that indicates me that's a good time to buy because it's kind of like a bottom hit, like for the last couple of decades. And then all-time high means anytime the stock goes up, like and touch when I was buying at 21, 26 or something like that, that's a possible short case scenario. We could short. I think for chasing, this is a good indicator. Let's see here, um, which I can remember when you started shorting this one, I think in March, right? May. So at May it was 14.27, which was also the all-time high for 52 weeks, but actually it has to be somewhere here. Yeah, so at this high, you can see it is 14 times more, and then right, and then select. Let's. This was 14. Let me put here 14. This was the all-time high on the price, but the ratio uh, all-time high is also 14, 13. Let's now see. Now the current price is showing here. Current price to fair value is around 11. That means again, if it reach 14, that's a good area to short. So let's see. Oh, it never has gone up to 14. Yeah, so this area was 9 actually. So it never had gone back to 14. So if it has gone back to 14, somewhere like that, that's the best area for us to short without any, double check, because it is all-time high compared to the ratios. But let me see here. What is that's 23. So this time in 2021, which is 24 times more higher. All right. You also asked BCTC, right? BT. Right, right. All right. So in this case, if we go back to the fair value below 40%, so these areas are buying areas, and I would expect it to reach 60% somewhere. I feel right now it has to reach 60%. Let me see this one. Oh, actually, right now we are in this area. So this area is actually is for 60% below the fair value. The thing is, do they actually make money? Because for us to go to this compound, making 25% compound year over year, we need to see the stock has money, more than 100 million. Can you see my screen or no? What are you guys seeing? You are seeing the financial data? All right, cool. All right, so they have about 15 million in cash in hand. That's the problem. For us to do, for us to trade this one with the 20%, 40%, 60% strategy, it has to be on a stock that has 100 million in cash in hand, and the market cap has to be 1 billion. So this one is kind of projective stock, but you are not wrong. This one is good because I am expecting, and many other crypto analysts are expecting, that the crypto market is going for the alt season soon. If this BTC dominance reach, I traded this, I think I shared this information with Billy M2 as well. If this goes back to 63%, this is where altcoin season going to start, this area. If I mean that's the lowest right now we can get the altcoins. And if as soon as if it reject one day by touching this area 63, then this will drop down up until the expectation for us is 58. So this area is where we're gonna sell. So that means BCTC, no BTCT is going to. I think they also announced that they are going to buy Ethereum and more altcoin, right? So this stock will go up a lot if that case plays out really nice. I think it can go back as far as, I would say, this here 7 first, and then the next one is at this area and this area. So these are the two main areas. If the altcoin season confirms, this will go up to 190%, and then 397 if it continues to go up. If not, then if the altcoin season, while this one is hitting here, BTCD hit 58, then this will start to revert back. So selling has to happen here. But if the 58 wasn't there yet and 58 is somewhere here, then that's also your time to take profit. All right. So that's which one you're talking about, BTCT? The only reason I would buy this one is because I'm expecting the altcoin season to happen. So if not, this is not a good stock for me to get in because they have the reason the fair value is high. They have a less amount of shares, like 9 million shares, and they have a couple of millions in cash in hand. And the revenue, you see, the revenue is not really good. It's net is losing. That's my biggest concern for this kind of stuff. But uh, it you can see at about 60% below, we also have the bottom hit. So it's not a coincident for us to have bottom hit out and also 60% below fair value. So this area is actually good, not bad. I think for you, you should have waited at least for a bottom hit. You said where did you buy it? 314. Okay, in this area. Yeah. So it's kind of high. Uh, so you are down right now 20%. Okay, not bad. Okay, not bad. All right. Yeah, it still have chance for recovery. 20% sell at 120. If but make sure you check BTCD. If you don't know, write it down. BTCD is the dominance, Bitcoin dominance. That means Bitcoin market is 4 billion. I think three. How much is now? Not Bitcoin market. The crypto. Where was that? Market cap is about 3.69. So from 3.69, Bitcoin owns 62% of that market cap. So if the Bitcoin market cap drops, Ethereum market caps goes up, which is right now, you can see it's starting to move up. It also has a couple of bottom hits. So if this one goes up to about 12 or 13 even, then the altcoin season will start really high. That means we can expect at least most of these crypto coins to make 150 plus in return within only for like 3 months max. Uh, yeah, yeah, maximum let's say two months, but do check BTCD. Okay, have an alert on 58, like I do have around 60, 58, 75, which is where I would think that it will start to like go up again. All right. So that does it covers all the information about the new strategy. Any other questions? No? All right. Let's go to QQQ. Let's see what happened yesterday. Um, all right. So again, when the market opened, I think I had a conversation with someone in the morning. I can't remember, but I was talking about that it could go down, and I did short buy puts a couple of times when hitting these areas, just because there was a trend chart pattern, not because of golden line theory, because right now there's nothing that confirms this is a buy. Now, bottom hit. So in this bottom hit, is it a buy confirmation, perfect buy confirmation? No, because this red color is not light red, but it is extended. So that's number one. Number two, it's continuing to stay on the white bar. So that means it's the same opposite of the yellow bar. So it's kind of dangerous. When you have a couple of yellow bars, you need to wait until at least two, downtrend alerts to come. So in this case, we have two bottom hits areas here and there. But again, the strong MACD red is building up. So and also Stoch is going to pass as well. So that is still not a good entry area. So these areas aren't really good. However, the bottom hit, the next theory about the bottom hit is when you have the alert, you draw these two up and down. So if the next bar open above these lines is when the bottom hit is come from, right? So far it has never happened. Even here, the bar started to open in this area, so it went up though, but it didn't open above the line, so it still invalidates the bottom hits in this area. But in this case, this one was above, this one was above, this one was above, so you have three times if you wanna play the bottom hit to get in as entries and just let it go up. So that this three candles actually, this some of them are actually good bullish candles, so entry would be perfect on those area. And then again, this year we do have the Stoch and the MACD is aligning, but it didn't touch any silver line. But you as not as a algorithm, but just as yourself, you can see if it is touching the same line a couple of times. So I would actually draw that touches a couple of times and then see if there's any rejection again, and then that area would be the entry point for me, which would be here, because it at that point we pass this torch from 80 going down, and also the light green was still there, so it's going down, which is the case. And also yesterday was actually bearish, so that confirms again. Now this case, this scenario, we don't have any, actually there was one. Okay, this is 2 minutes, this is at 5, so we need to go to 5. At 5, let's see if we can find any bearish area. So this one, you can see without this here, you can see it's getting rejected. These candles are getting rejected. So this is an area that gets consolidation. So when consolidation happen, how would you how would you find consolidation? I remember I shared this information before as well. If you see green and light and again green, dark green and light green, that's the consolidation area. Same with red, light, that's consolidation as well. So this confirms the consolidation. And when there is consolidation, just draw the pattern, breakout pattern, and get in. You can get in after that. This is I'm drawing this with the parallel channel thing tool. You just put here like that, because at this point I would say somewhere around here, you're gonna wait until this pattern drops, breaks, or next touch breaks. And I would say this one didn't break, that breaks. So if it touch here, somewhere here, or even now, right now, it's also not bad. Let's see here. There you go. That breaks down this here too. So those kind of small patterns using parallel line tool you can find good entries as well. So again, there's the bottom hit. If there are multiple white candles, then remember I told you we need at least two bottom hits. But this case, we didn't have multiple, so draw that lines, upper line and the bottom line, to see if the next candle is opening up above this upper line, then it confirmed, but it didn't. So this is the area, and then you also have this trend line, and then you see the trend line about to get, and then you did had a bottom hit again. Draw that thing, and if the open is above the bottom hit, which is here, would be the case for this to buy, if you guys are going to play the bottom hits. And then since then I didn't see anything to trade for the day. Any questions? Well, I didn't get you. Mm-hmm. Yep. So right. So couple of cases. First one, there's a couple of reasons for the invalidation. First one was there are multiple white candles. Remember when you guys are trading the yellow candles, it's hard to predict. So when you have multiple white candles, you need at least two bottom hits. That's the number one in scenario. Number two, every time you get a bottom hit, you need to draw the highest and the lowest lines like this. And then if the price next candle open above the highest line, must be open above, not crossing, open above. Then that validates as an entry. So this case, this candle didn't open above, this candle didn't open, nothing open. So next four candles didn't open above. So it's not good. Those are the reasons none of these were valid, because even here you can see opening didn't happen. So all these two bottom hits are invalidated because of that. Does that make sense? Yeah, yeah, yeah. Yeah, so consolidation, the way to find out the consolidations is this. When you have red bars and then white, red, again a dark red and white red, that's the consolidation area, which it matches here. That's consolidation, that's why it's choppy. Again, if you go to, we are right now in 2 minutes. You can capture a lot of information in 2 minutes for consolidation. This one, green, light green, dark green, and then light green, another consolidation or choppy area. So avoiding these and drawing the parallel lines, you guys can predict where it is going. Breakout point, this one here, that's a great entry point because it's breaking from the consolidation pattern and then going up. So those kind of stuff. Does that make sense? Again, this area, you have multiple consolidations if you check with 2 minutes or even 5 minutes. Again, this one red, light red, red, like this area kind of consolidates in 5 minutes. Actually, this one here. Why? Yeah, these three. Yeah, what was that? Mhm. Yeah, that's the consolidation because we check with 2 minutes. Um, you yeah, you see here. Consolidation means also like choppiness in that area. It just doesn't work really well. You can also go back to 1 minute and check as well, and it gives you more consolidation areas like these even these areas. So the for me the way to what's that? Yeah, right. Hmm. 36 or yeah, 37 or 36. Yeah, because it is above and opened above and also closed above, so that area is the best option. Also, it's rejecting this line, parallel line. If you draw it right, somewhere here. So this one came down, but it didn't touch, but still it's a rejection because it down and then goes up and up and up and like that. So this is just like advanced. These are the ones that I'm sharing with you, I think, right, Mega? Sometimes you ask where it is going, then I draw this and then send it to you. Now you know uh, some cases how I'm doing it because you can do the same thing with 2 points. You have 2 points and then with combine it with one on the bottom, it also gives you a trend line. So right now here it touch and the next one is white. That means basically heavy selling pressure. This one you can actually then short as well, buy puts as well, if you are doing the trend lines. But master the golden lines always, and then these are like additional helpers for you guys to like figure out. Because bottom hit is not the number one thing. Number one thing is golden lines, and then bottom hit, then trend lines, parallel lines, and then chart patterns. Anything else? When you're drawing the parallel lines, make sure to like just give it more width because sometimes it can catch up on a different way by touching those areas. So you will be able to sometimes capture that area. This parallel line case is really good if you draw them for the pre-market, something like that. You can find out the touch points, this area, heavy touch, this what do you call it, value zones. So this is selling area, this one is selling area, so those kind of stuff. And then you can, again, if you trade in the value zones, then just draw it like that, and then again it confirms. So there are a lot of other tactics that you can integrate to the same strategy, but just master one, and then I can share this stuff later. Anything else? Does everyone understood the first part of this video? And then the second part, obviously, just a refresher for you guys. All right, cool. All right, guys. All right, that's it then. I think this. did record. I'm not sure it recorded your questions. If not, I will try to put some Word document and then merge the video and then publish it. All right, guys. Talk to you later. Bye.